If you're a federal employee planning retirement, there's something happening in 2026 that most people are overlooking. And it's not about your pension or TSP, it's housing policy. Recent changes in HUD housing policy are creating uncertainty, and that uncertainty can quietly affect your retirement decisions. Let's break down what's happening and what it means for you. HUD, or the Department of Housing and Urban Development, plays a major role in shaping housing regulations, fair housing guidance, and public housing rules. In 2026, several updates and rollbacks, including changes to fair housing guidance, are shifting how housing policies are interpreted and enforced. Now, this doesn't directly change your pension or benefits, but it does impact the environment you'll retire into. And that's where things get important. For federal employees, retirement planning isn't just about income. It's also about where and how you live. Housing costs, accessibility, and compliance rules all influence your long-term financial stability. With changing policies, there's more uncertainty around things like housing availability, regulatory protections, long-term affordability. And if you're planning to relocate after retirement, these factors become even more critical. Another issue is policy uncertainty across federal systems. When policies change or guidance is removed, it creates gaps. Those gaps can lead to inconsistent implementation, confusion in housing markets, and even compliance risks depending on where you live. This kind of uncertainty makes it harder to plan long-term, especially if your retirement depends on stable housing costs. So what can you actually do about it? First, don't rely on assumptions. Just because something worked a few years ago doesn't mean it will hold up in a changing policy environment. Second, build flexibility into your retirement plan. That means being open to different locations. Factoring in potential cost increases, avoiding overdependence on one housing scenario. Third, review how housing fits into your overall retirement strategy. It's not just an expense, it's a major variable. And ignoring it can create financial pressure later. If you're within 5 to 10 years of retirement, this is especially important. Small policy shifts today can have a bigger impact over a 20-30-year retirement. Here's a simple way to think about it. Stable policies create predictable plans. Changing policies require adaptable plans. So instead of trying to predict every change, focus on building a plan that can handle change. Before you retire, ask yourself, can I afford higher housing costs if policies shift? Do I have flexibility in where I live? Is my retirement plan resilient to uncertainty? These are the kinds of questions that matter now more than ever. Because retirement planning today isn't just about numbers. It's about navigating change. If you found this helpful, subscribe for more federal retirement insights that actually matter.